everyone, my name is Puneet and it has been a while since I last uploaded my video, and I would like to apologize if you are unable to hear me out properly because I do not have a specific mic for it. But yes, what I will be covering today is a video on hedge mode again. And last time I shared a video for getting for setting up an hedge position, and how you could just hedge your positions in spot and futures, if you have a crypto trading account on Binance or Bybit maybe. So today we are going to do the same, but this time I'm going to do it on MT5. And the reason for that is on MT5 we have the option to you know buy and sell at the same time for a particular price point, and it is a lot easier for us to set up the trading stop loss and take profit levels. But yes, obviously we do not have the option for setting a partial take profit level, so that is a bummer. But then again, we are going to use risk to reward ratio of at least 2 is to 1 or 3 is to 1 in terms of take profit to stop loss, right? So let's jump into it, and let me show you how it's done. Okay, so uh, as you can see right now, I'm on GBP USD. Let's go ahead and set up a trade over here. Okay, we do have some open account trades. Let me just close them out. I'm just gonna keep the Australian dollars against USD because I really believe that it is going to go down for a bit. So let's just wait for it. And yeah, as for the others, let's just go ahead and place some trades. Okay, so um, let's say we want to go long and short at the same time. Okay, we know that the highs and lows work as a resistance, and they can either break, or they can either you know work quite strongly in order to give us a certain direction, right? So let's go ahead and set up a certain one certain position like that. Okay, and since this is Monday, we have plenty of time for this position to cover up. So let's go ahead and see what this high is. Okay, so right now on this particular candle we have a high of 1.31456. See, all right, so let's just go ahead and create a new order. So first of all, we are going to make sure if in case it hits this particular price point, then what we are will do. So over here the high was 1.314456, 1.31456. Okay, and what I'm gonna do is I'm gonna place a stop loss at about 200 points, and I'm gonna place my take profit at about 400 points. Okay, so 200 points are going to convert to at 31656, right? And for take profit, we are going to place it at 1.31056. Okay, so it is a perfect ratio of 2 is to 1 for stop take profit to stop loss. And let's just add a comment. Okay, so placed. So once we have placed a sell limit right now. Okay, so now we need to place a buy as well on this particular price or price point. Okay, so what we are going to do is we are going to place a pending order, and we are going to go with the buy stop, and then we are going to use let's say the same price point, which was 1.31456, right? So we want to go along the moment it hits this price point, and as for the stop loss, we are going to use 1.31256 again. It's the same ratio, right? So, and as for the profit, we're going to place it at 1.31856. Now with this particular strategy, you do not you're not concerned about the time it is going to take for it to execute, because you can place such orders in multiple levels. So hedged position to touch So now as you can see over here, up at the top we have two orders, both at the same price point, which is 1.31456. They have the stop loss at 656 and 256, which is basically like a 200 points difference, right? So what we're going to do is, like, we are simply going to go ahead and enable trading in it as well, and we are going to go with just 200 points. And that's it. We don't going to do much. So what happens is, like, if in case any of these trades fail, they will fail at a break-even point, and that is going to, mean that, we're not going to lose much money at all. And in a long run, what you're going to see is, you are going to witness a lot of trades that, will be stopping out at exactly at the break-even point. But at the same time, the winners are actually going to, give you some profit. And in the long run, that is actually going to be a lot more helpful for you as well. Okay, so this is particularly for those people, who actually commented on my video a few a year back. And I I'm not really a YouTube guy, so I don't really know much about YouTube and how to interact with people over there. But yes, this is just a response to everyone who took their time and commented on my video and saw the video, or and for that reason I'm just uploading this video. So do let me know if you think there is still something missing. But yes, this is one of the best ways for placing multiple orders, because you're not really utilizing your account balance, as you can see over here. And the account balance will only be utilized if in case you have some active trades in your account. So that basically leaves you with a lot of leverage. And that would also mean that you can place multiple trades in multiple tickers, obviously. So let me show you one more example. So this is USDCHF. Okay, so once we are here, let's just try and see what level could actually help us in this. So I'm gonna assume that this is the level that we might be able to place a safe trade at. Okay, so we have a level at 0.84605, right? So we're gonna go ahead and place some trades over here. Yes, just a moment. Okay, so buy limit, that is correct, and we have the lot size, which is quite small. And the reason why I keep it small is because I want to be able to place multiple orders. And I create sort of a grid that allows me to to place multiple levels. And for that reason it becomes a lot safer for me to say yes, one of those levels are actually going to be executed, because even I do not know what levels will be executed and at what time, right? So let's just go ahead and place the order again. Okay, so 84605. But yes, there's one more thing that I wanted to mention over here. Okay, so we always want to consider the distance between the last high and the previous high. Okay, so or the previous low and the last high. Well, the reason for that is quite simple actually. So once you know what the difference between these two levels is, that would allow you to know that yes, this is the sort of the extent to which a particular instrument can go up to, or could go down from. Okay, so let's just go ahead and try that. Okay, so let me see if I can share my other screen. So just a moment, please. Okay, I hope you are able to see my screen right now. Okay, so what were we on? We were on USD CHF, right? So let's just go ahead and try that USD CHF. So what we want to do is we want to sort of calculate the distance between the last high and the previous the high before that, and we are simply going to do that same for the low as well, just to make sure we have a range of a distance between the highs. All right. So this is the last high, right? So that's a distance of about 51 points over there, right? So let's just confirm that we have the same distance down here as below. So about 36 points, right? So that basically means what it is ranging between anywhere between 40 to 45 points, give or take. So for that reason, what we're going to do is we are simply going to use the take profit or stop loss ratio again within that same manner, but then again we have to double that because there's a very good chance that they might hit. So let's just go ahead and place a trade again. So first of all, we are going to place a buy order. The price is at 0.84605. Okay, and now again I am going to place, see what the distance that we calculated was about 50 points, right? So we are going to use a distance of about 100 points in here, and that would allow us to to have some sort of a leeway that would allow that would be beneficial for us in the long run. Okay, so 0.51 points, right? So 100, let's go with 100, right? So 84 500. Okay, and over here let's go with 84 700. Okay, again 1:2 risk to reward ratio. Okay, so no, sorry, I made a mistake. It has to be 800. Sorry. Yeah. Right. So that's our buy order, and now let's place a stop order for the sell as well. Sell, stop, sell stop, and we are going to use the same price point, which was 84,605, 0.84605, and again we are going to use this 1:2 risk reward ratio with 100-point difference. So 0.857. Let's go with 10. Okay, and no, let's just go with 700 itself. Okay, and over here let's go with 0.85. Oh, I think I made a mistake over there, right? Yeah, I made a mistake actually. It is 84, not 85. 84 605. Yeah, then this has to change as well. 84 64 607 and 84 605, right? 605 minus 200, that's 4, right? So 400 points over here. So we place the another order, and now we are going to trail them. So trailing stop, and we need to define this trailing stop loss value 100 and 100, right? So now what we're doing is we have sort of created a zone in this case, what is actually going to happen. Okay, let me just show that as well. So right now we just placed an order, and let me see if I can draw proper drawings over here or not. No, actually I can't. So let me just draw this same on here. And what time frame were we on? Yeah, we were on 1 hour, right? So 1 hour. Okay, so I just placed and can place some orders at 84,605. Right, so 84,605, 84,605, 84,605, so somewhere around here, right? So I went with a stop loss of about 100 points, right? So 100 points is going to be this, and again I went for a take profit of 200 points, right? So 200 points are going to be 200, somewhere around here, right? So let's just place one more again. At the same price point, and we are going to use the same risk to reward ratio of 1 is to 200, 200 points right around here, and 100 points stop loss somewhere around maybe here. Okay, so we have risk to reward ratio of 1 is to 2, in both of these positions, and they are going to be executed at the same price point, right? So this is what we are hoping for, right? This is the price point wherein we want to go long or short. So this is how it is going to play in reality. Okay, so again there's no guarantee of how it is going to work. So there's a very good possibility that after hitting this point it could go here, and then it could go up, right? And once it does that, this stop loss right here, okay, this stop loss would actually be also be triggered for the short position, right? So this particular stop loss would move up to this point, and then it will go up from here as well if this particular scenario works. Okay, so again it is still a risky move. Okay, it is not 100% guarantee that you are actually going to make profit, but then again there's no guarantee in market anyway, right? So then we have the general scenario, which is going to be, let's say, let me change the line type. Okay, let me just do that after. All right, so let's say we took a support right around here. Okay, so initially what happened is we were hoping for a position that would work, that could work in either way, right over here. Right, so we have no idea of if that is actually going to happen or not. So what we need to do is we need to embrace ourselves. We need to be able to see how this is actually going to work. Okay, so there's a very good possibility that market moves up like this, then your stop, the moment market moves up, the stop loss also moves up to this point, right? So um, sorry, this was a stop loss, right? So this stop loss needs to move right here if it makes a distance of this point, this particular price point. So if it moves to up to this price point, then this stop loss will move to this price point as well, right? So this is generally what we are hoping for, but then this is again a little more safer than what you do in general with other methods. Okay, so yeah, this is correct. Okay, so there's no guarantee how the market is going to move up or down, but yeah, again once you hit this price point, you have a position in both ways, and the still since we are sort of trailing the positions, and we are hoping that the trailing actually works the way we want it to, then what is going to happen is this stop loss would actually move up, and this stop loss will actually move down in either direction, however the market is responding to, right? And if it hits the second take profit, then again in that case we will be securing this differential at the very least, if we are going with 1:2 to reward ratio. But then again, I would recommend that now, if in case you're working with something like cryptocurrencies or anything else, then you uh, go for a higher point difference of stop loss and take profit, because in general the stop losses are hunted way more often in crypto than in forex. So I like forex because it is actually profitable for me. So yeah, that's about it for now. Let me know if you guys still have any doubts, or if you are a little more concerned about it, any in any sense. Okay, so that will be all from my end. It was really nice talking to you guys again, and have a nice one. Bye.